This is Tristan here from 𝗨𝗣𝗗𝗏𝗧, and today we'll be going over DXY. For this video, we'll go over some technical analysis and also some areas that I feel like we may be traveling towards on the DXY. So, like usual, we'll start with the weekly time frame. And just before we get into the TA side of things, I just wanted to mention something that 3 weeks ago, or on the 31st of August, which is close to a month ago, I delineated that this swing will be the first draw, and then this is a screenshot. You can go on to the video on the YouTube page and you can have a look again. I marked out this as our first draw on liquidity on the daily time frame, and there's another draw that's on the higher side that's not in the screenshot, but you can see it in the video. And I just wanted to point that out based on our TA today, that how our TA worked out based on what we were anticipating or we predicted for the market to do in the upcoming weeks. And I'll just do this and go into there, and there we go. So I'll just drop into the daily time frame so it's easier. And so this was the first high that I just showed you in the screenshot. That was the first high that I mentioned in the CPC video 3 weeks ago, and we were around here. So price action was just basically in this area, and I marked out a volume imbalance that price was going to mitigate in here, which was on the weekly time frame. So if we jump back out into the weekly time frame, I can quickly show you the volume imbalance that was just around here, 1 and 2. So the way we mitigated was like we were in this volume bar, in this candle, and then we retraced back down into this volume into this imbalance, and then we impulsed away from there. Maybe that's easier to see. Zoom into that. You see, there was a 50% mitigation right into that fair value gap, and then we went away from that. So just to show the power of TA, and actually this was the second high that I marked out on the in the chart. For the second drawn liquidity for us, and this is already being fulfilled within this week. So very simple. MITA is normally very simple, and I try not to overcomplicate things and just work with what swing points that price may be attracting towards based on how it's reacting at certain areas. So we can start our analysis for this video. Basically, is now we see on the weekly time frame that we have been impulsing away in taking out the buy side liquidity that was resting around these highs, and this was the internal swing point that fueled the move to the upside basically. So this formed as internal liquidity, which pushed the price down, took out the relative equal lows, and then we impulsed away into the higher time frame zones and higher levels basically. So now we also see on the weekly time frame that we do see an order block that price is just mitigating at this point as we speak, and we are right around the 50% we spiked above, and we are just around here. So two areas that I will be making sure that I have in mind going into the future. That will be the first one will be the 50% mark for the fair value gap that sits into the premium around here. So I'll just mark out the 50% so it's a bit easier, and that's it. So we do know visually that this is something that we are drawing towards, and this is an order block mitigation that we have. So every time in SMC and in ICT analysis, we see that there is a breaker structure to the upside. So what do we do? What do we expect after that? We see either a consolidation, a pullback, and then we start to see a reversal if the overall trend is going to stay bullish, and then we go into the higher time frame order blocks. But until then, we have taken out the most prominent areas on the chart. So we are expecting some sort of retracement back into the range. And when we say retracement, I would like to see a retracement down into this range. So that will be, I'll just move this order block a little bit to this side. So we know that this is an order block, so I'll just leave it around here. So it keeps the chart a little bit more cleaner. So the reason why I picked this swing at this point is because this is the low that is lower than this low and lower than the next low. So we mark this low as our immediate swing range. So we do that as a swing range low, and I'll mark that as a swing range low. And right now this high is unconfirmed at this point, but for example's sake, right now we'll just mark it as a swing high. and we just do a 50%. This is the deep discount mitigation. If we start to drop back down, I feel like we are imposing away. So the next drawn liquidity also looks like in this order block, and also at the same time that's the next drawn liquidity that I feel price will be drawing towards, is because we are impulsive at this stage in price. So when price is imposing around highs and we are not seeing considerable pullback, which means that there is willingness to push the price higher. They're okay. Market makers are okay to buy at a higher level. So it's easier for them to push the price away, induce a lot of people in buying. And then when we start to mitigate internal swing range, which comes into a confluence with a fair value gap, then I feel we may have a bigger reaction down into the range. But for at this point, we do work with what we have in front of us. So 50% of the current range is something that I would like to mark out on the weekly, and the range high and the range low. And I'll just mark this as an error at this point. So this is our current range on the weekly, just to make things a bit more clear. Now we drop down into the daily time frame, and I'll just zoom into this price action, and we just work with what we have, correct? So this is an impulsive price at this stage, and we are currently in a Thursday. So I'm expecting some sort of continuation, or if we start to see reversal signs, then I might expect a Thursday and a Friday to be something like a reversal pattern, and then we start continuing to the downside into this proportion block or into this order block, which is right around the 50% of the weekly range. So right now on the daily time frame, we do not see any sort of expansion or anything, especially for Thursday. We had big 3 days. Monday, Tuesday, and Wednesday were big days, expansion days. Basically, we came out, we broke away from there, and now we are just around here, a small range at this point on the daily. So depending on what price does, and if you're looking for some sort of an entry, we have to drop down into lower time frames to gain a little bit more candles, and at the same time a little bit more clarity on what price might be doing. This is just to remark at this point that, yeah, we are seeing this is the high unconfirmed, and we see a doji with displacement. Nothing on the 4-hour time frame. We have to drop down into the 15 to see the reaction. So there we go. So on the 15 right now, what do we see? So I do realize it just trading we just does this, it just keeps moving. But that's the range high at this point. We have what relative equal highs we displaced below the intermediate term low. And the reason why I call that intermediate term low is because it ran the highs. So the highs were ran, and then at the same time the lows here were also ran with displacement candle to the inside, but then also we did respect this order block. We're impulsing away, and this is either forming an impulsive price action around here for continuation, or this may act as a failure swing. So our invalidation point starts at around here, so we'll just do an invalidation 2.0 because that's a smaller invalidation at this point for a continuation to the downside, and we expect a displacement below this low, so we'll just mark that as liquidity at this point for displacement low. And then if we start to break above and start to chase liquidity around these buy side, then we may see some continuation. Looking at internal price action just around here, we do see that there is some sort of willingness of continuation at this point. I'll just remove that. So price, what is price doing? Price came in, now it's impulsing down, respecting the lows and respecting the order block, mitigating, and now we're impulsing away. So either we chase this and then we start to form a bearish price action with displacement, then we can look for some shorting entries. But at this point, I see that there is this fair value gap that was mitigated at this point. We impulse down, but we failed to break below the lows. So there's a high possibility that we can just impulse down into the order block and continue to the range high, take out this relative equal highs, and then may see a bigger price action or a reaction to the downside. So on the weekly, this is what I on the 15-minute, this is what I have. And this is very simple. So we do have a higher time frame draw, which is around here. So if you're looking for some entries, I would rather wait for long, because I'll have a lot more conviction in longing it. If I want to short, I would wait for displacement after this high was mitigated failure and then we have a strong displacement to the downside, then I will chase down this liquidity. But let's say, for example, we just take this and we start to displace down. I still want to see some sort of a very good healthy displacement below these relative equal lows and close below this, and then a pullback into the range around here will give me high confluence trades to drive it down into these areas or further lower into this relative equal trend line liquidity that's been built up. But at this point, there is no certainty that what price might be doing, either going up or down. Also, we can do something like this. We can mark out a 50% of the range, and we are in the premium. This is the range. We came down into the discount, mitigated. We went into the premium. We also mitigated the. Sorry about that. Maybe that's better. So we are failing to close right above the 50% of the fair value gap. I'll just do this. Maybe 15 would be a bit better. Yeah, there we go. So we failed to close above and we displaced down, and we are again trying to attempt. So this can also form as a rejection block or an order block that can be later on mitigated, and then we can continue to the downside. So a couple areas that we can mark out is this fair value gap that was mitigated, and then price pushed down, and now we're building liquidity, and then we can see some sort of impulsive price action to the downside. Basically, all these shorts that were open will get distributed in the lower side of the range. But right now, there's no point of shorting because you do not have displacement to the downside. So I'll be very careful before I start to take shorts at this point. Once we have displacement below these lows, I'll have more conviction and then play this swing to the downside. Basically this, we have a consolidation, sweep, and then break down. We have some sort of an entry in here, and then we play for a continuation to the downside, if that makes sense. Because we have a raid of the older higher time frame zones, because this was a buy side liquidity raid. We have that, we have a displacement, and now we are range bound at this point. So I'd like to see a displacement, break out of the range, and then a pullback into the range again to mitigate, and then take a mitigation entry down in here. So yeah, that's my take on DXY at this moment. But yeah, if you guys have any questions, feel free to leave a comment. And also read through the description. We do have BingX as our sponsor. So feel free to check the referral link. You do get discounts and stuff on depositing and using that exchange. So yeah, and come join us in the Discord. We send out signals. We send out a lot of information based on market updates and educational videos on a regular basis. So it's a fun community. Just come join us anytime you feel like it. You're more than welcome. But until then, you guys take care, and I'll speak to you guys next time. Peace.